Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the gold market. So once the market has opened on Tuesday, on Monday, sorry, you can see what we've got yesterday. So it was really fast, at least at the moment of the opening. It was really fast upward direction. Market has shown the reaction on the moderate consumption expenditures numbers and relatively diverse statement from the Powell. Because data has been released on Friday when the market was closed, and today it is showing very interesting reaction and interesting performance. Why? Because if we take a look at the other markets, in particular speaking on the 10-year yields, you could see what has happened. Yields has jumped, supporting the United States dollar, and usually, as you know, this is the headwind for the gold market, but we do not see any significant drop. So yesterday it was some short-term attempt to drop when the ISM index had been released, and indeed market has started showing reaction. But today, when the news had been reported on geopolitical scene, so as you know that Israel has bombed the Iran embassy in Syria, gold has got another supportive factor, as now you can see what's going on. So it's moving harder together with the interest rates and together with the dollar. As we said in our report, and actually not just once but many times, we said from time to time it will be some fundamental factors, mostly economical, that could become the headwind for the gold and could even trigger some short-term pullbacks. But since gold right now is a really specific asset which has some external additional supportive factors that no other asset has, this impact, some bearish factors, effect of them might be compensated or even muted just because of the overall situation and the specific role currently of the gold market. And you could see what's going on right now. So we do not see any significant impact on the ISM numbers, and we see just the market stands flat and everyone is keep going higher, standing in the range of the yesterday's session. So for now, from the technical point of view, now we have only one important question: whether it will be downside retracement from the 2270 area or not. It's just because chances on the pullback is really high, just because 2278, as you know, this is major OP on a monthly chart, and it's also daily overbought, weekly overbought, and from that standpoint, reaction seems absolutely natural and has really great chances to happen. At the same time, we have some additional factors that would actually either minimize this reaction or even cancel it, depending on how situation will develop. From that standpoint, we need to keep an eye on what's going on lower time frame. So in general, market has completed 2 of 3 targets that we have mentioned yesterday or in the weekly report. So first of all, it has completed 1618 extension of the butterfly, 2250. This is upper border of the channel and weekly overbought again. Next, we go into the follow time frame chart where market has completed another butterfly target, 2262, and shows the pullback. That particular was the pullback on ISM report. And here the major pattern that we need to keep an eye on. So in fact, here we have some kind of background for a double repo sell. First close below the 3x3, market was not able to reach 30% support, close above. Now theoretically, market should try to challenge this top and complete major monthly OP around 2278. It's forming some stronger spike up here, attempt to complete it. And then we should keep an eye on closely. If after that we will get more or less strong, fast downside action, that suggests that we probably will get deeper retracement on the gold. If in the current points right now, we will not see any attempt to just for a fast upper direction market instead starts forming some kind of the pennant around. It means that now will be no pullback, so we should be ready for another upper direction and then see what will happen. So if we will not get the classical double repo shape, it means that market has no intention to reverse right at this point. So maybe it will happen after payrolls, maybe at some other data will be released, but not now. That's particularly what we intend to keep an eye on. Whether to take a short position based on patterns that might be formed around 20 to 75, 20 to 80, this is up to you. Personally, I have no intention to take the short position in gold market right now, despite that it's at overbought and actually technical reasons exist for a possible taking scalp short position. But taking in consideration the whole context that we have around this metal, personally, for me, the risk is significantly higher than the advantage of the possible taking the short position. So if deeper retracement will happen, I mostly will watch it just as a chance to take the long position. From that standpoint, I'm interested with a possible pullback, not for trading, but just because the potential could give the better chance for taking the long position. So, but this doesn't mean that you can't trade it on the short side and actually take some scalp bearish positions on intraday charts. It's possible if you have more or less good background. So that's actually our humble view on the gold market. Let's see how situation will develop here.